And what is holiday-thinned trade for that Lunar New Year out in China, despite fears that a new coronavirus from China could spread rapidly as millions of people travel over this week-long break. Now, most markets had stabilized overnight as investors took some solace from the World Health Organization labeling this outbreak as just an emergency for China, where 25 people have died and more than 800 have been infected. But not as yet for the rest of the world. Japan's Nikkei was able to eke out a small gain by close of trade today, rising around 0.13% at 23,827 points. The Hang Seng was mostly unmoved but closed an inch lower at the end of the day, finishing at 27,901 points. And of course, the Chinese market will be closed for a week starting today due to the Lunar New Year. Let's get on over to Wall Street now in the U.S., where the S&P 500 ended slightly higher and the Nasdaq eked out a record high close last night. A lot of that was helped by a jump in Netflix, while news about the coronavirus outbreak spreading from China and mixed earnings results kept a lid on the market. Based on the latest available data, the Dow Jones Industrial Average fell 0.1% to end the day at 29,159 points. The S&P 500 gaining the same mark, though, to close out at 3,325. The Nasdaq Composite adding 0.2%, 9,402 points. Let's quickly check in then on how the markets are doing out in Europe then as well. It's a pretty much green day, so some sort of recovery coming through then in that market picture. The FTSE 100 out in London shifting back above that 7,600 point mark, over 13,500 as well then for the DAX, while the CAC 40 sits firmly above that 60,000 point mark. On the local front, well, it has been a bit of a topsy-turvy one, but we're getting some recovery in the all share today. That sits higher at 57,000 points, having dipped below that mark yesterday, closing 1.7% down, but perhaps too oversold is our local index, and picking up ever so slightly with the industrials and financials also sitting in some green territory. The commodity shares, well, not necessarily doing as well as one would have thought. It was a bad day for both of the gold and platinum shares yesterday. Resources had fallen the most yesterday, 2.5% odd as well. Now today recovering as well, 48,575 points there. Onto your commodities then as well. Those have been quite interesting of late. A firm rise to nearly $1,600 a fine ounce for gold, but it's now petered off as demand begins to perhaps wane ever so slightly. But it does seem like the market still likes it quite a bit then as things continue to flow on. Back above $1,000 a fine ounce for platinum, and that has been quite interesting, with the oil price then sitting around $62 a barrel odd as well. 14.34 for the US dollar is what the currency is sitting at, and it's quite interesting then to note that still at these levels, it is less than what the rand was at the beginning of 2019. So still not a bad mark for the local currency. It's 18.79 for the pound, and the euro will set you back 15 rand and 83 cents. Quick look at those BRICS currencies. It's a bit of a red day across most of them, with really only the ruble in Russia sitting in some green territory, but red across most of the other BRICS nations. Let's chat now to Warwick Lucas then from Galileo Capital, who joins us to unpack this market picture a little bit. Warwick, thank you so much for the time. Really appreciate it. It has been a week where perhaps the market has looked towards some sort of gain. We haven't found it in droves, but one thing that's for sure is that the market is looking to that coronavirus to hopefully find some stability. They're hoping that, there'll be a clear sentiment that it is contained and won't spread to the rest of the world.
Absolutely. Well, you've stolen some of the words out of my mouth there. I think the key issue at the moment with a new virus like that is always a question: can it be contained? How deadly is it? How readily does it spread? And so on and so forth. And it reflects a lot of uncertainty. Of course, in the background, doctors frantically working as hard as they can to establish those factors. Yeah. So it's not just about the degree of deadliness of it as it currently stands and so on, but how bad could it get? I mean, we know every year that over 1 million people die from regular flu, for example. So that's not the issue. Is that can this one be the one that spins out of control. And until that question is fundamentally put to bed, the question mark hangs over.
Help our consumers perhaps understand here, how is a virus like this impacting on markets? Why would something like this impact on market movement, whether it be oil demand, whether it be the actual markets themselves sitting in negative territory?
Okay, it's largely because of the panic that flows from it, because the panic flows from the unanswered questions. Yeah. And that leads to people economically doing less, going out less, interacting less, and less economic activity. So it's more about the sentimental impact rather than the more serious concern of, oh dear, well, people will die from it and there will be less demand and so on. That, of course, then is a much more serious scenario if it actually manifests.
Yeah. On the local front, if we touch still economically, we saw inflation coming out at 4%. It's the first gain in about 4 months or so, still below that target band, or still within the target band and below the midpoint of the target range. Anything else that we need to do to perhaps get another cut later in the year? I'm being ambitious here.
Look, clearly, I think it's still indicated that economy really is stone cold. I mean, the biggest gain was electricity prices, which is administered cost gain. I mean, in a number of areas, there were prices that were virtually 1% higher annually and so on, in quite a few little subsectors. They really clearly were just not advancing at all.
On the equity front, we saw the likes of Anglo American, Sibanye Stillwater, all of these companies deciding to cut out staff. We're even seeing ArcelorMittal today deciding that they want to cut staff at some of their production factors as well. How difficult is it in a time when the economy is not growing and companies just have to keep cutting out staff?
Okay, so in terms of Anglo Plats, I didn't see any sign of staff cuts there. They say I think there are some at Sibanye.
Sure.
I mean, in terms of production reports, Anglo's production report was okay. It might be interesting to note, though, that in the South African platinum mines, although they've been doing quite well, it's important to remember that the running has all actually been made by palladium. I mean, at the platinum price where it is, I mean, basically it costs those mines about $1,500 to pull an ounce out of the ground. So on platinum alone, they are making quite a serious loss, and they're actually getting pulled through and pulled through quite nicely by palladium, and then extras like gold and rhodium and a long tail of others. But it's important to remember that those platinum mines, they're living on a little bit of a wing and a prayer in some areas.
What's the one point you're looking out for the remainder of next week, heading into next week?
Okay, so I think from a certainty point of view, South Africa needs to know what on earth is going to be happening with Eskom. We've seen some traction coming in there from its new CEO, who looks encouraging. Sure. We've seen a report from the CSIR, which is detailed, authoritative, and somewhat concerning. And I think we actually need to see now that government stands behind its new CEO and gives him traction.
Warwick, appreciate the time. Thank you so much for that. Warwick Lucas, joining us then from Galileo Capital, helping us unpack that market picture a whole lot more. From me, though, that is where the buck stops after the break. SME on point with Diabo Seto is, of course, from Davos, and your money as well after this break. Do stay tuned. This is SABC News.